originally everyone thought Social Security would take care of us. That's probably not going to be the case. It used to be that if you wanted to invest in a venture capital fund, you had to have $1 million or more. Peter Thiel famously invested $500,000 in Facebook, turned it into $1 billion. Most people say, yeah, but I'm not Peter Thiel and I don't have $500,000 in my retirement account. But that's not the point. You can take $500 and achieve the same return. Einstein referred to compound returns as the eighth wonder of the world. That's what you get with retirement accounts. And if we can all take advantage of that, bang, let's do it.
All right, guys, bang, bang. I've got Eric here with me. Eric, I thought a great place to start would be kind of a primer on retirement accounts. I think lots of people have heard of retirement accounts. They may even have one, but they might not understand how they actually work. So, what is the purpose of a retirement account and why are they so advantageous for the everyday person?
Well, loaded question. So thanks for starting easy. I think most people know that a lot of folks have just brokerage accounts where they can invest in stocks and bonds. Some may be more surprised to understand that there are actually more people with retirement accounts than non-retirement brokerage accounts. So give or take 150 million retirement accounts across the population. And the retirement account was created. This is like, it's not a surprise, right? The logic holds up. The retirement account was created to give each of us an opportunity to save in a tax advantaged way, such that when we get to retirement, we actually have some savings to fall back on. Right. So originally, everyone thought Social Security would take care of us. I think not again, unfortunately, not a surprise. That's probably not going to be the case, since by 2035, I think it is, we're sort of on a path for Social Security being run dry. And there are two really important parts to the tax advantage nature of retirement accounts. One is where you invest you contribute funds on a pre-tax basis and get to invest on a tax deferred basis. That means you don't pay tax sort of across time, and you only pay tax at the end when you start to take distributions. The other way, and that's referred to as a traditional IRA. The other IRA is referred to as a Roth IRA. With a Roth IRA, you're putting money in on an after-tax basis. You also get to invest tax-free over time. But then when you take those distributions, because you paid the tax up front, you get to withdraw on a tax-free basis. And so for those who can afford to contribute to Roth IRAs, that is a huge advantage, and everyone should do so over a longer period of time as they can. But the traditional IRA is still a great way to put money away, invest on a tax-free basis as you go, and then only pay tax upon distribution. And of course, I think you and I talked about this once before. Einstein referred to compound returns as the eighth wonder of the world. That's what you get with retirement accounts. And if we can all take advantage of that, then bang, let's do it.
And so when you think about kind of these accounts, they essentially are used as an incentive to get people to think long term, right? You lock up the money for a predetermined amount of time, and the government will give you tax benefits for doing so. What are the types of assets that people normally are putting in there? Are they putting in cash? Are they contributing other types of assets? Like, what goes in? And then we can talk about what they're actually doing once the value is in that account.
So historically, retirement accounts, they've never been restricted, by the way, to public stocks and bonds. But historically, it was only easy to invest in public stocks and bonds. Now, the IRS, for let's just call it accounting purposes and for clarity, says that you can only contribute cash to a retirement account. So you can't take IBM stock from your non-retirement brokerage account and contribute it to your retirement account. You first have to liquidate, take the cash, and then make the contribution. Now, Yeah, for those who don't know, I'm the CEO of a company called Alto, and Alto is both a custodian and a transaction execution platform that makes it easy and affordable for folks to invest their retirement savings in non-publicly traded securities. So that can include private equity, venture capital, real estate, crypto assets, private credit, et cetera. And so the drafters of retirement account language, all the way back to when ERISA was created in the early 1970s, accounted for the fact that we weren't going to be limited to just publicly traded stocks and bonds. So really, the now short answer to my long-winded question is that almost any type of asset can reside within a retirement account. But in terms of what goes in and what comes out, for the most part, it's cash. There are exceptions to that rule on the way out, but it's complicated.
And so when you think about these types of assets, obviously we mentioned the compound growth is a huge advantage. The stocks and bonds, some of it was an access play, which is easier to buy those inside. But I'm assuming private equity, venture capital, other types of kind of long duration type investments, as it has become easier to access those within retirement accounts, they kind of line up with the incentives of these retirement accounts. Is that a fair statement?
It's 100% fair, not just fair, but accurate. So one of the things you're referring to duration matching, right? So you're taking dollars that are meant to be saved and invested over a long period of time, and you're investing them in assets which are going to actually take a long period of time in order for you to achieve liquidity. Liquidity is when an asset is sold and you receive cash in return. So, for example, I invest in a venture capital fund. On day one, $100 goes in, and hopefully 10 years later, or somewhere between 7 and 12 years, let's say, $10 comes out. And that, of course, is advantageous to a retirement account investor. One, because that money comes back to the retirement account on a tax-free basis. But two, I couldn't touch that money anyway, right? Not until I retire. And so these are exactly the dollars one should be using to make long-term investments. The other big thing that's changed over the last now 5 to 7 years is technology. So it used to be that if you wanted to invest in a venture capital fund, you had to have $1 million or more. In today's world, and with various investment platform partners that Alto works with, you can invest as little as $1,000 or $10,000 or $100,000 or $1 million. It doesn't matter. And Peter Thiel famously invested $500,000 in Facebook, turned it into $1 billion. Most people say, yeah, but I'm not Peter Thiel and I don't have, $500,000 in my retirement account. But that's not the point. The point is actually that you can take $500 or $5,000 and achieve the same return. And that's the point.
And so when you think about these long duration type assets, it's almost exactly opposite of if you were to put dollars in, let's say you were, 25, 30, 35, even 40 years old, and leave it in there for, call it 20 to 40 years. The dollar has historically been devalued quite a bit. And so the idea of saving in your retirement account is actually a little kind of weird, because it's not saving. What you're trying to do is get dollars in and then invest inside of the retirement account, right?
Yeah. So unfortunately, I think everybody's getting smarter with respect to the effects of inflation in today's economic environment. But you're 100% correct. If you take dollars and just put them in a checking account or savings account, and they earn very little, if any, interest over that 20 to 40 year period of time. When you take that dollar out, it's actually been devalued. Right. So the dollar is no longer worth the dollar. And that is I should say the dollar that comes out 20 to 40 years later isn't worth the dollar that went in 20 to 40 years earlier. And which speaks to the fact that, we need to we need to make investments, and we need to take the risk reward into consideration as we build our portfolio. One of the things that we like to preach at Alto is portfolio diversification. So it's not that public stocks and bonds and public markets are bad or good. They play a role. They're just not the be all end all. And so how do you get portfolio diversification that allows you to reduce the overall volatility of your portfolio and increase the long-term returns? And that happens with alternative assets. And so, especially, right, everybody who has a brokerage account today, whether it's a retirement account or otherwise, is looking at their statement and they're seeing a significant decline, 18 to 22%. If you look at your alternative asset balance, for most people, nothing has happened. And it's not that those assets haven't gone down in value. They may have gone down some may have gone up, but you're only repricing when a transaction happens, whether a private company raises money or sells itself. But otherwise, you can't wake up and hurt yourself with alternative assets, because the liquidity is not just there for you to access. Whereas in the public markets, and we all know that 99% of us are terrible traders. The market goes down, we wake up, we sell. The market goes up, we wake up, we buy. It's the exact opposite of what we should be doing. And you can't do that with alternative assets. And so it is not only a good portfolio hedge, it's a good hedge against human nature.
And so when you all think about building out this product, one of the things that's fascinating to me is you obviously offer the kind of stocks and bonds access. You've pushed further and further into alternatives. And then you also now offer Bitcoin and cryptocurrency access as well. Where does that idea come from? Are you seeing that like kind of customer demand or market demand, and you're saying, hey, we got to go build a solution here? Is it something that you all predict and then kind of customers move into that area because now it's available? How does that work?
So, because crypto is still so young in its life, most of the traditional brokerage firms haven't made the crypto asset portfolio available to its client base. And I don't know if you remember this, way back in 2016, you and I were talking about doing a crypto, at the time, Bitcoin mining operation together. And so I had, Bitcoin got onto my radar screen sort of 2013, 2014, around 2016, 2017, when I was on the board of the TVA. To me, this felt like a no-brainer that the TVA, who has an endless amount of energy at basically zero marginal cost, ought to be in the crypto mining business. The answer, I was like 30 years younger than most of the other board members. And so when I brought up Bitcoin, I got a lot of blank stares and looks on my face, and I just couldn't get the board there. So then I called you, and we were looking at doing a crypto mining facility together. And for various reasons, that didn't quite work out. But the point is that crypto had been on my radar for a long period of time. And when I recognized that the traditional brokerage firms, Fidelity, Schwab, TD, et cetera, weren't allowing folks to invest in crypto, which at the time was Bitcoin and a little bit of Ethereum, I said, you know what, we need to do this. And so over about 2 years, I was able to build a relationship with Coinbase and eventually partner with them such that when our client comes to the Alto platform to invest in crypto assets, the transaction execution, while performed over the Alto platform, actually takes place at the Coinbase exchange. And so that's the way it works for us and our clients.
And so today, when somebody comes in, how much money could they put into an account? How much can they actually invest? And then what are the assets that they could buy in kind of the crypto ecosystem?
So, what's really interesting, if you go and you ask the average consumer, is there more savings in like pension funds or 401ks or IRAs most people will say 401ks. But the fact of the matter is that actually IRAs have surpassed 401ks in terms of total dollars saved. And they're continuing to grow at a faster rate than 401ks. The reason being is that we all now stay at a job for a shorter period of time than we used to. And when you leave that job and go to a new employer, you have the opportunity to roll your old 401k into an IRA. Also, the gig economy, where people don't have access to 401ks, but only IRAs, has been a major growth accelerator for the IRA basket, if you will. So on an annual basis, those of us, I can't say those of us, those who are 50 or younger can contribute $6,000 a year. Those who are older than 50, like me, get a quote unquote catch-up allowance, and it's either $7,000 or $7,500 a year. So that amount you can contribute every year to an IRA. There are some restrictions, excuse me, and you should probably consult a tax advisor if you're in a high income bracket. But for the most part, that's true and accurate without other characteristics involved. But what's not captured in that is that ability to roll old IRAs or old 401ks into a single new IRA if that's what you want to do. And so if you look at what the average account size at Alto represents, we're north of $1 billion, probably 1.2 billion over 30,000 client accounts. So I think if we do the math, that's give or take 40,000 on average. But I don't think that tells the whole story. I think we'll see that we have client accounts as low as $500 and as high as $2 million or more dollars.
And as you start to see people come in and use these products, what are the risks? Like, what are the downsides potentially of using a retirement account or investing in these types of assets in a retirement account?
You can still lose your money, right? Like and by the way, people used to think that the argument when we were starting Alto, right, was, people aren't smart enough and there's too much risk. And by the way, they were talking about that in the context of a public market run that we hadn't seen in a hell of a long time, right? And so people thought that the public markets could only go in one direction. I think the tune has changed a little bit with respect to that the public markets are not risk-free. There is downside. Unfortunately, we've seen a lot of that, but it has accelerated the conversation that alternatives really are going to play a role going forward, right? Because historically, you had to be an ultra high net worth or high net worth individual or professional institutional investor to participate in these markets. And thanks to technology, you no longer have to have that $1 million blank check to participate. You can participate at much more. I like to say you can participate at any economic scale that works for you.
Yeah. What's fascinating to me is if you look at some of the public pension funds, we've seen them push further and further into alternatives, even in some cases take on leverage where they previously haven't. And so obviously they're going out further on the risk kind of curve. They're looking for certain types of yield that maybe they couldn't get previously. And so there's not really a big difference between someone investing in their retirement account, looking for better returns, looking to combat inflation, looking for a kind of higher yield than the quote unquote professionals who work at these pension funds. They have very similar goals, right? In some way, they're just simply investing the retirement funds of the pensioners in a pooled fund versus you doing it individually inside of your own account.
Yeah, I couldn't say it better than you just did, right? Which is more people actually have access to alternatives than they know. It's just because some professional institutional manager is investing on their behalf in their retirement account. And when I was first looking at this in early 2016, by this I mean the opportunity to create this platform that would allow individuals to easily invest in alternative assets using their retirement account. there were a few different things that stuck out. One was we've got $30+ trillion sitting in retirement accounts. The next was that less than 2% at the time was invested in alternative assets. And I compared that number to what we see on an after-tax basis for high net worth and ultra high net worth individuals. And that's going to be anywhere from 10% to 25%. And then when you put the institutional money managers in the mix, that's going to go from 25% to, Yale famously invested as much as 80% of its endowment in alternative assets. And what I sort of, rightly or wrongly, what I concluded was that this process of investing in alternative assets was too complicated, too time consuming, and too expensive. And so if we could solve for those three things, essentially what TurboTax did for self-filing, if we could do that same thing for alternative IRA investing, well, then we could really help a lot of people and change the fate of retirement in this country. So that's what we're trying to do.
When you think about Bitcoin and cryptocurrencies specifically, I know there's a lot of nuance around these assets. What should people know about Alto IRA's kind of crypto offering and some of those nuances, whether it's specific functionality, fees, anything like that?
Yeah. So we make available to our customer anything that's currently available on Coinbase. There's some geographic restrictions involved with that, but if it's available on Coinbase, it's available to you at Alto. Now, I don't think you'd be surprised to learn that the majority of the holdings of our client base reside in Bitcoin. Ethereum is second, Solana is third, Cardano is fourth, right? And then there's a long tail. And we don't tell you what to invest in. We don't tell you what not to invest in. We make it available. And, as you're want to say, you got to do your homework, right? And as we were just talking about a second ago, that there's risk reward in every investment. And another thing that I think we've discovered over the past couple of months in the crypto environment is that the rules of finance don't cease to exist, right? You can't get something for nothing, and the more crazy the return seems, the greater the risk you're taking on.
Shocking ideas that seem to have been figured out decades ago, maybe even centuries ago, depending on who you ask. When you think of the product today, what's kind of the pitch to folks? Like, why should they come and use Alto IRA and specifically the Bitcoin and crypto kind of functionality?
Yeah, it's really easy. That's why. It's easy and it's affordable, and it's meant to really unlock access to these asset categories for all people, for all retail investors. And, like you, I believe in the future of crypto and where it's headed and the role that it will play. I can't tell you what the winners and losers are going to be long term, but it's going to be here and it's not going away. And we should all have the opportunity to benefit from the sector so long as you do your homework and make your investments, wisely. You're not going to bat 100%. Nobody does. Where there will be losses, but there will also be wins. And the key is, and this is no different than private equity and venture capital, by the way. The key is to have the wins, far outpace the losses. Anyway, that's my approach.
And when we think about where people can go, where can they find you on the internet, or where can they find out more about Alto if they want to check out the product?
Yeah, altoira.com, ALTOIRA.com. So hopefully when you go there, the website is easily digestible and understandable, and it's easy to sign up for an account. And we make it as seamless a process as is possible to transfer assets from another IRA account to a new Alto IRA account. And one thing to keep in mind is you don't have to transfer the whole thing. You can have a Fidelity account, and you could say, you know what, I want to put $1,000 or $5,000 or $10,000 to work in alternative assets. And so that's the amount that I'm going to transfer over. And that may represent 5%, 10%, 20% of your total portfolio. And the percentage that it represents and the percentage that you're comfortable with in terms of risk reward and your understanding of the alternative assets market, that's up to you.
And when you start to think about kind of what people should expect, you said easy in terms of the service itself and the product usage and kind of how quickly they can sign up. What do you hope customers say to each other once they actually use the product?
That's a great question. But by the way, nobody has ever asked me that question. Like in the last 5 years, nobody's asked me that question. And so I hope they tell their friends, right? So historically, what we know is that bad news travels by plane and good news travels by boat. And I think social media has really leveled the playing field in that regard, and that if you do have a good experience, you can tell everybody about it. And one of the things that we talk about amongst our team at Alto is that at some point, while we may be leading the field today, and my hope is that we continue to push boundaries and stay ahead of competition over the next several years, but at some point, all the technology will be table stakes. And what ultimately makes the difference is that client experience and the customer service experience, and the fact that we answer a phone and return an email and allow you to sign up for a Zoom conversation. At the end of the day, it's all about the people. And I don't think you can decide to do that 3 years from now. I think you got to do it today. And so I have frequently said that I will know that we have made it when whoever the CEO of Southwest Airlines is at the time, shoots me an email and says, "How do you make your customers so happy?" And that's because I hold Southwest in very high regard, and I love flying that airline. And I think they just do it right, and they do it with attitude. And so that's our goal.
That's awesome. Eric, listen, I really enjoyed talking to you today. Anyone who hasn't checked out Alto IRA, suggest you go and you do that as well. And the idea of helping people get Bitcoin or cryptocurrencies, assets that traditionally are thought of as kind of long-term duration assets, into a tax-advantaged account is a pretty solid idea, I think, and obvious why people would want to do that. So thank you to you and your team for spending so much time and effort to make that possible for hundreds of thousands, if not millions of people.
Pomp, thanks for having us.